Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita, and let's quickly take you through what's happening in markets. Broadly, you've seen some of the headlines. 0.5% lower, the Nifty 50 benchmark, 140 odd points shaved off. We've obviously made a bit of a recovery, but it's a very half-hearted recovery. We are currently sitting at very close to the day's lows or just off the day's lows. 2450 odd is what we're holding on to. In terms of IT, that's one of those sectors which has actually come under pressure today. 4% low on HCL Tech. 0.5% higher though on TCS. So TCS holding up fairly well. You're seeing some of the other stocks also, Persistent, LTM, Tech Mahindra, doing fairly okay for themselves broadly. When you're looking at the Nifty Bank, that's the other one which is under pressure. 1.2% lower on the Nifty Bank index. And so it's a mixed bag per se. You're seeing CanBank, which is down 3%. AU Small, Bob, SBI, IDFC First, IndusInd, all down over 1.5%. Let me also throw in a Kotak over there. So you can see some of those laggards, just no stock in the green within the Nifty banking pack. Last off, from within the Nifty 50 index itself, you're seeing some of the aluminium stocks perked up. Hindalco is up around 1.4 odd percent, and metals in general seem to be doing well. So that they're basically going against the market at this point. And we'll talk a little bit more about that trend. Metals and pharma, really, those are the two buckets of stocks which are actually doing okay and have been doing that way all through the day of trade. There you can see on your screen that pretty much all through the day we've sat in the green. Auto is the other one where there's pressure, PSU Banking Index and Realty. Those are the three pockets where the pressure is evident. Within the Nifty 500 index, there are some gainers. Nuvoco Vistas on the back of the numbers, 8% higher. Biocon, 7%. Concor, 6%. Again, Concor's numbers came in yesterday at around 320, 325-ish. And therefore, that stock reaction has happened today. Adani Power and Cartrade are just some of the others that are actually playing well in a market like this. But the breadth is extremely difficult, right? It's 3:1 on the decline advance, or 1:3 on the advance decline, over 1:3 on the advance decline. So the declines outstripping the advances by at least 3. That's the trend we're seeing. But let me go across to Avi. He's here with some of the stocks that are buzzing and why.
So let's discuss some of the stocks buzzing in trade. To start from, it is IDBI Bank, which is up by around 4.5% on back of news that agencies are reporting that Indian government is close to accepting an offer from Fairfax Financial Holdings for IDBI Bank at a much higher price than the original offer, which was below government's reserve price. So on back of that news, IDBI Bank is gaining around 4.5%. Up next is Concor, which is also up by 5 to 6% as it has posted the volumes for Q1. The export volumes are up by 10% and the domestic volumes are also up by 6%, while on an overall basis, the volumes are up by around 9%. So this is a very strong Q1 update for Concor, leading to which the Concor is now up by 6%. Talking about our next stock, Welspun Corp is also up by 2% on the news of getting an order worth 1400 crore rupees from various enterprises. So that is a big order win for Welspun Corp. Up next is PDS, which is also up by 5% on securing a SaaS order for a global supermarket retailer. Under this order, it will be handling sourcing from Bangladesh, India, Pakistan, Sri Lanka and Turkey for this global retailer, and expects to manage annual sourcing of around $250 million. So that is a big SaaS order for PDS, and that is why it is up by around 5%. Our last pick would be Hindalco and Vedanta Aluminium, as Hindalco is up around 2% on back of news that Chalco, which is the Aluminium Corporation of China and also the biggest aluminium producer in China, has posted some very strong macroeconomic data from China and is boosting the sentiment for the metal sector here back in India as well. So companies like Vedanta Aluminium and Hindalco can be seen benefiting from this, as the benefit from similar structural advantages along with lower raw material cost and resilient margins can help Vedanta Aluminium and Hindalco to achieve this business update as well.
Okay, thank you so much for that, Avi. Kunal, let me come to you. And by the way, viewers, also joined by Kunal Bothra in studio. Kunal, how is it that you're looking at the market today, and what are the levels that can we hold? 24K very likely, even if things were to go south this week, or would you still be of the view that 23,800 to 24,300 will continue to be the band? Does the band shift higher as a result of the moves today?
Not really. I think the band still remains for the indices. Good afternoon, Harsh. So what we are seeing in the last, I think, 4 or 5 days or from the mid of the previous week is the index just about trying to grapple into a trading range. 23,800 is a very strong support. We've managed to just about protect ourselves from the previous week, Wednesday, that single day of sharp sell-off where the Nifty was down 500 points and the Bank Nifty was down more than 1,500 points. From there, we've seen 2-3 days of a decent recovery for the indices. However, I think with this persistent news flow which has come back across the Middle East, I think that could probably maybe I would not say spook the markets a little bit, but it will cause a little bit of concern or maybe a risk-averse mode from investors as well as short-term traders. So I think we are in that process of just about trying to adjust with the latest happenings across the globe. In that sense, I would sense that this range for the index would continue. The only important observation which we are spotting today on the charts, right from yesterday, there were two important observations that the put-call ratio was up to 1.6 and the range for the index in terms of options was 24,000 to 24,200. That range still remains. Even on a day like today where it's the weekly expiry. So we are seeing a very high built up by the 24,000 put option strike that indicates that there's been a good amount of put writing or support which is at the 24,000 levels for an intraday basis today. And on the higher side, 24,200 still remains to be a major resistance.
Okay, those are the levels on the index itself. Kunal, some strength in metals and pharma, can that continue?
Yeah, metals could be an odd case because I think it's just Hindalco and maybe some shades of positivity which has come back into Tata Steel, where the stock has just been trying to take support at the 190 mark. But I think it's very, very individualistic as of now, just specific towards 1-2 stocks from the entire pack as such. But pharma, I think, could be a different ballgame altogether. I think what we are seeing is a second level of a breakout for the pharma stocks. What started off initially maybe a couple of weeks or a month out back for the pharma stocks, where it was few mid-cap names and then very few select large-cap stocks starting to show signs of a breakout. I think now that move is trickling back into other, rest of the pharma pack also. Today, for example, you've seen Biocon finally heading towards that breakout of 430, 435 mark. Of course, on the back of news flow, Sun Pharma has looked very attractive. The stock is confirming a breakout back again about 1950 levels. DV Slab has been doing fantastically well. So I think the pharma as an overall pack looks to be a more stronger sector, more of a cohesive move across the stocks within the sector. So that's the one space which I would want to bet on. But the real estate, rather the metal stocks, are the ones which I think could probably take a bit of a backseat.
And continue to be long IT, Kunal? Would that tilt remain? Yeah,
so the long IT trend still remains for the individual stocks as such. It's just that we've seen this as a pattern that over the last 10 odd days, there has been one single day of 3-4% up move for the IT index, and then 2 days of consecutive pause for the IT stock. So I would sense that maybe I think today, tomorrow could be a day where the IT index could go into a bit of a pause, mild retracement, try and come back towards some short-term supports on the hourly charts. And then I would probably expect that the stocks may go into maybe a couple of more rounds of bounces or an uptrend for themselves.
Interesting. Okay. So what's the floor on the Nifty IT then? Therefore, what should we look at in terms of at an index level, not at a stock level? What should we look at? 28,500, 28? What should the levels be?
See, I think broadly 28,000 on closing basis should be a good support. And this is the low with the IT index had made, I think, yesterday. And from there, we saw almost like a 1,000-point rally for the IT index. So in the last, I think, 10 odd days, we have been highlighting this pattern. The support of the previous lows, even though intraday it may be breached, but on closing basis, those supports generally get held on to. So I think in that sense, 28,000 on closing basis could be a good support.
Okay, 28K could be the support that IT will look for. Okay, Kunal, your picks in a market like this?
So I'll go with two buy calls, and there are some interesting breakouts which are happening on the stock specific front. SBI Card is something which is looking attractive, a stock which has been a huge underperformer for the last many months. I think the stock closer to the 600 levels is establishing a base for itself, signs of an RSI divergence, rather bullish RSI divergence for the stock as a setup. Looks attractive for a target of 666. Stop loss could be kept at 610. The second could be a buy on Premier Energies. Even this stock is a very interesting name, which is popping up on the charts. Today in the last couple of days, the stock has seen a mild correction from the previous swing highs, but I think could be due for a further catch up on the upside. 1130 as an immediate target, stop us at 1077.
Okay, so those are your picks out of the way. Let's slip into a very short break. On the other side, we'll be joined by Anshul Sehgal, founder at Sehgal Capital. He'll give us a perspective on how he's looking at markets. We'll take a bit of a fundamental view and thereafter start talking about buzzing stocks as well. But looking forward to this conversation with Anshul. Stay with us. Welcome back, and you're watching Closing Trades here on ET Now. Let me go across to Meryl. She's here with some of the stocks you want to keep on your radar at this hour of trade. Meryl, what's on your list?
Yes, these are some stocks that we've seen buzzing in trades so far today. Starting first with Landmark Cars, very in focus today after reporting a very strong set of first quarter numbers. Consolidated revenues for the company was up about 22.5% on a year-on-year basis, while vehicle sales as an absolute number have also jumped up about 24.5% again on a year-on-year basis. The stock is seeing is doing tremendously well in today's trade, up almost 12% so far. Godavari Power, on the other hand, is another stock that is buzzing. The company has temporarily suspended operations at its Chhattisgarh iron ore pellet plant, and the suspension is due to curtailment of contracted gas supplies by GAIL. And the company has maintained that it will have no long-term impact on the company's operations or profitability, but the stock is still suffering a tad bit, down over 1.8% in today's trade. Sesha Sai Tech is another name in focus after Investec has rated the company a new buy rating with a target price assigned at 430 rupees per share. Investec is expecting the company's revenue to grow at a CAGR of close to 12%, while profit after tax is seen outperforming the revenue CAGR, growing at 14% going forward. Dhampur Bio is another name on my list today after the company has reported its first quarter results. Net profit has turned out to be positive this time around versus a loss of 22 crores in the same period in the corresponding year previously. Revenues were up about 8.2% for the company this time around, while EBITDA has gapped up to 4.7% on a year-on-year basis at 9 crores versus a meager 8.6 crores on a year-on-year basis. So yes, these were some names that are on my list, and these are the stocks that were buzzing in trade today.
All right. Okay. Thank you so much for that, Meryl. The other buzzer today is Satvik Green. Motilal Oswal has initiated coverage. We marked that in the morning. Stock was perked up 5%. I wonder where it is right now. Let's quickly pull that one up as well. See what Satvik Green is doing. 23% upside is what Motilal was seeing. Very resilient in a market like this. In fact, let me also bring on board Anshul Sehgal, founder Sehgal Capital, to talk to us and try and decode what markets seem to be telling us. Anshul, very resilient, right? I mean, oil has gone from, crude has gone from 72 on Brent to 84, 85. Our markets have done nothing. We've been very resilient.
Hi, Harsh. Pleasure to be with you. Yes, sometimes you need to, there is a saying that sometimes what counts is what cannot be counted. And the emotion of the market cannot be counted. And in that context, you have to look beyond the numbers and seek the emotion of the market. As you rightly mentioned, with crude moving up and the markets really being resilient, it gives you an indication of how resilient and what kind of emotion is getting built into this market. And in our judgment, that is an emotion of tailwind rather than headwind. Also, if you speak with companies on the ground, it's quite evident that they are geared up very well for the next few years, not just 1 quarter or 2 quarters, where, of course, there can be volatility. But for the next few years, they're building in tremendous bullishness in their business. And as we know, markets follow earnings. And if earnings are expected to be strong, not for the next quarter, 2 quarters, but for next 2, 3 years, that should get reflected in valuations. Overall, we would be more constructive than not in a market like this.
Constructive than not. Good to hear. What is it that you would opportunistically look to buy in a market like this, Anshul?
I'll tell you, there is opportunity, Harsh, across the board, whether it is capital goods, it is financials, even certain tech segments, etc. There is opportunity across, but this will have to be a much more nuanced market than the market that we saw sometime in 2023, where you could buy anything and it would double in pretty quick time. So you would have to choose your pockets very well. For instance, in the financial space, over the last 2 years, we know that there has been weakness in the microfinance space, a subsegment of financials, as also the lower end of, say, housing finance, etc. There again, there has been some amount of stress that we have witnessed on the balance sheet in the last 2 years. But have a look at the fourth quarter results of most of these companies. There is clearly a turnaround that one is witnessed in the fourth quarter, as also the commentary from many of these companies is for tremendous growth going forward. If you just build in that kind of number on earnings and compare it to market capitalization, these companies are trading at just north of 10 times price to earnings. And companies which were trading at 4 or 5 times price to book are now trading at maybe 1.5, 2 times price to book. That to us seems like an opportunity. As growth picks up, we estimate that valuations will trend towards previous sort of levels. I'll give you another instance in a sector which is unrelated. Take the data center AI hype, and there is a fiber optics cable company that I was sort of fortunate enough to attend their conference call in January. And the results conference call indicated that the tariffs impact was about 7% on their numbers. And some of their growth was getting impacted because of tariffs because they were unable to export to the US. Now, if your call was that tariffs is temporary and those will actually abate in time, and you could see the tailwinds of the data center AI space on capital expenditure, which many of the large players, Meta, Amazon, etc., were indicating, then clearly there were tailwinds on demand for a sector like this. Now, at that time, after the call, the stock was trading at some 86, 87 bucks. It peaked out in June at about 650 bucks, so a six-bagger from there. And now that company trades somewhere close to 500 bucks. The point being that if you can identify nuanced pockets in this market, there is tremendous money on the table.
Yeah, I mean, no lack of bottom-up ideas, Anshul. Thank you for that. That kind of gives us a good perspective. But what's the next 6 months to 1 year going to hold? Give us a sense of that. You spoke about private sector banks in some form, fashion. You spoke about the one example which played out over the last 6 months. What are the other pockets? Because data center and the entire theme now looks like a lot of it is already built in, right? So therefore, not much of an opportunity going forward for an investor looking at these stocks today.
That's where the trick is, Harsh. The company that I mentioned, the segment that I mentioned, if you look at that company's operations over the last 20 years, it's a very cyclical sort of sector. And when the cycle is on the low, there is general disbelief in the market that this cycle will ever turn. And it is at precisely those levels that valuations are in your favor. Hence, now that, and you made a very incisive point that, the data center theme, their valuations are really they're shooting the roof. Now, if you were to look for pockets in that space, it's going to be tough because it's largely discovered most of the upside has played out, or at least the early upside has played out. And so you need to go into pockets which have been out of favor in recent times and where opportunity resides at the moment. And in that context, the one segment that I mentioned, the microfinance space, that looks interesting. Aside from that, there are certain media names, which again have been quite out of favor in recent times and where earnings seem to be on an uptick going forward. Those can be quite interesting. There are certain special situations where, say, very interesting and sectors which are quite exciting at this time. Those are hidden within less exciting sectors, and so companies, so these companies are not getting re-rated. Markets are not focusing on these companies. Demergers are happening in such companies, and so the exciting sectors will come to the fore. That's where opportunity resides. Food, even textiles. There are branded companies in textiles and garments which are quite interesting. Oil and gas services. We know what has happened geopolitically in recent times. And so India, in our judgment, is going to deploy significant resources towards oil and gas services and capital expenditure. That looks very interesting. So as I said, opportunity across the board, but you have to be you know, a stock picker and a nuanced investor to identify those.
So many themes already, Anshul. Let me dig into a couple of those. Do you believe that the theme, especially with regard to home interiors and the ancillaries to infrastructure, the Astrals, the Kajarias of the world, do you believe that there is tailwind there as well?
It's India. I just recently I did an analysis on the home improvement space, and I don't want to go into too much detail, but take for instance just one segment, which is plywood and related sectors. In that space, the annual opportunity market size is somewhere in the region of 50,000 crores, is what we came to a conclusion to. Now, the largest company in that space at this time will be around 4,500 crore in size. That just tells you that, and there is of course a huge unorganized sort of sector within that subsector within that sector. Organized players within this space are going to gain significant market share going forward. They are coming off a cyclical low. There are issues with pricing, which now in MDF, for instance, capacities come on board in chunks, and there are, the demand picks up in aggregate steps. As a result, there is oversupply in that space, and pricing takes a hit. Many stocks have gotten impacted as a result. And now that impact is getting absorbed because demand has picked up, and we will see tailwinds pick up as well in this space. Valuations are reasonable. So home improvement to us looks very interesting. Within that, whether it is tiles or it is plywood and wood-related spaces, or it is even cables and wires, there we see tailwinds. Looks very interesting. Infrastructure as well.
Cables and wires, in fact, Anshul. Again, the rally has been stupendous. I mean, if I were to pull out maybe the 2.5 year chart on a polycab, the stock would have done, I believe, from 4,000 to sub 4,000 to maybe 9,000, 9,500 now. And there is competition coming in as well. There's a large player who's entering the cables and wire space. I believe it's Adani Group who's entering the cables and wire space as well. There's Ultratech also looking at similar spaces to enter. Despite that, you continue to remain bullish?
The market opportunity in that space remains very large. And some of the large players that you mentioned are entering through existing companies. One of the players has acquired an existing company. Another player is also looking to build up. That company is building up ground up. But it's a very difficult space to build credibility and distribution. Also, the distributors, I have direct sort of experience of this sector, because I remember after the IPO in our portfolios, we bought Polycab. The stock used to be at an 8,000 crore kind of market cap at that time. And it's about 150,000 crore market cap today. And one of the reasons why we identified Polycab is because we spoke with a lot of their distributors and dealers. And the feedback that we would get unanimously is that this company takes care of us. Our return on investment with this company is very strong. And the product has pull because of the brand salience, as also because of the quality of the product. And as a result, the stock has done so well. Now, for a new entrant to displace Polycab or an entrenched player like that is not going to be easy. Of course, the market, both in this market, is just so robust because of various tailwinds that this space, can have legs in the long term. It's definitely an interesting space.
About the smart working space, Anshul, I was speaking with the management of SmartWorks today, and I also spoke to the management of office space. 25-30% growth, no concerns with regard to demand. They're saying pretty much everyone who's looking for an office space is not looking to buy, is only looking to rent. And then on top of it, there sits the ancillary services and the like, not looking particularly expensive either. So bullish plus, valuations to some extent in your favor. How are you looking at that space?
Some of these investments, Harsh, I've realized that over the years, and this is through experience, that some of these investments you need to take a long-term view, look at the market opportunity as a whole, and look at basic trends that are working towards capturing that market opportunity. And if you've done that, you just have to buy some large players within that opportunity and just stay put for the long term, 3-5 years. And if not in the short term, over this period, you will get very handsome returns. Anything north of 20-25% CAGR is, you're a king if you get that kind of returns, right? And if you're saying that these companies are expecting the industry to grow 25-30%, clearly some of these companies will grow at least in line with industry. And earnings, even if stock prices were to trend in line with earnings, that's the kind of return you will generate here. So again, rather than worry about the short term where there may be volatility both in earnings as also in stock price, if you take a longer term call, a macro call on some of these plays and invest with that perspective without getting worked up about short term volatility, there is significant money on the table.
Anshul, thank you as always. But I really enjoyed the conversation today. I must say that so many little nuggets from across the conversation that I can pick up and try to correlate with various stocks. And therefore, this was an interesting one. Thanks so much for joining us. It's been a very short break. Come back with more. We'll start getting a little more stock specific. Talk about some of those movers in trade. Something like a landmark cars. The stock is perked up 12%. We'll get Kunal's view on that as well. Stay with us. Welcome back, and here's an ET Now exclusive. The centre is likely to approve the financial bid for IDBI Bank disinvestment, while Fairfax India may emerge as the selected bidder for the same. Prakash here with more details.
Well, an important development coming in from our government sources on the IDBI Bank disinvestment, as government may approve the financial bid for IDBI Bank disinvestment. A very significant development. In fact, sources tell us that the Interministerial Group on Disinvestment held a meeting to review the revised bid submitted by the existing bidders. In fact, a wider consensus emerged in the IMG meeting to finalize the revised bid submitted by the existing bidders to move to the next stage of transaction. A very crucial development at this point in time. In fact, IMG on disinvestment may have accepted the revised bid submitted by Fairfax India. The alternative mechanism on disinvestment is likely to meet soon to complete the necessary formalities, and after that, the Union Cabinet will consider the proposal within a month. A very significant development. In fact, DIPAM sources tell us they plan to complete the transaction by end of 2026. You are aware of the fact that DIPAM fast-tracked the disinvestment process after the first financial bid submitted by the bidder was found to be below the revised price. Then, DIPAM invited revised bid from the existing bidders, and now sources suggest that Fairfax may be emerged as the selected bidder. Let's see how it pans out. But that's an important development coming in at this point in time, as the government is likely to approve the financial bid for IDBI Bank disinvestment very soon.
Well, that'll be a large one. Thank you for that, Prakash. Plenty of reports coming through this morning with regard to that. Also, what that will mean is, so while IDBI Bank has perked up 3%, what this will also mean is that Fairfax will have to disinvest from its 40% holding in CSB Bank because they won't be able to own both together. That's likely going to be the condition. And if that is the condition, then they may have to disinvest from CSB Bank. And you can see the knock on that stock as well. But let me go across. We're joined by Shivangi Sartha of Motilal Oswal. Kunal Bothra, of course, continues to be with us. But Shivangi, on the market itself, what are the levels you're looking at for the Nifty? It's expiry day as well. Give us your perspective.
Very good afternoon, Harsh. Thank you for having me. We've seen that overall there has been a quite volatile day. In fact, the market opened with a bit of a global concern, and over and above all that, we've seen buying from the support levels, but then follow up was clearly missing. And it failed to cross 24,200, which was the immediate barrier. But as of now, we're looking at the expiry to close above 24,000 levels. And till the time it holds above the same, we could expect the up move towards 24,200 and then 24,350 levels. Now, support can be, of course, seen at 23,900 marks, which will be an important level as a stop loss. But buy and decline to continue over here in the Nifty index. Any small declines are being absorbed very quickly and smartly. So, of course, buyers are to win here. Now, talking about Bank Nifty, we've seen some bit of underperformance here after series of outperformance. And Bank Nifty, however, holding comfortably above 57,000 levels. It is facing some bit of consolidation, but in the last 2 hours, we've seen a very smart pullback from the 57,250 odd mark. So 57,250 would be an important base to consider for the next few sessions for the next up move towards 58,000 and 58,250 levels.
Okay. All right. But that up move likely to happen and likely to happen this week, Shivangi?
So, we are still 2 weeks into the July monthly expiry. So the up move, we are expecting it till the July expiry. Of course, immediately there would be some bit of consolidation that could be seen here because follow-up is clearly missing at the higher zones, which is kind of making the upside a bit of a gapped scene over here. In the previous week as well, we saw that the index failed to cross 24,500 levels and hold above the same. So some bit of consolidation, but support-based buying is intact. So, we don't see a much downside from these levels as well.
Your picks for the afternoon?
So as of now, I'm looking at BSE, which is looking quite positive, and this one's made a little bit of a bottoming out structure over here after 4 to 5 odd weeks of weakness. We've seen this entire space is doing quite well, and this will definitely be on my radar. BSE is one pick that one could keep on mind, but also metals are now showing quite a bit of action and follow-up buying from the lower levels. So Nalco is on my radar. We've seen that this stock on the larger time frame has been trading in an upward sloping channel, but on the weekly frame, we've seen some bit of pullback move from the retracement level, which is quite positive. So Nalco is one stock to be kept on radar. The next targets we are looking out for is 380 odd levels with a support base of 360 zones.
Okay. All right. So those are the stocks you want to keep on your radar. What we'll do is slip into a very short break, come back, plenty to speak about, including maybe the likes of an HCL Tech, which is taking a bit of a knock in trade. TCS, on the other hand, continues to do extremely well. There's some very solid strengths in that stock. We'll talk about both of those on the other side. Stay with us.
Back with closing trades right here on ET Now. A breach of that 24K mark, just lingering around that level as we speak right now for the Nifty futures. And that's a good over 200-point decline that you've seen. Look at an HCL Technologies. While it's been a casualty from the word go today, started off quiet after its numbers. And I think the markets had already priced in all the good in the run-up to the numbers. And when the guidance stood flat, that's when you did have reason to sell into HCL Technologies. And of course, you know, amidst all the IT majors, HCL Technologies is the one still sitting on premium valuations. 4.5% lower for HCLT as we speak right now. HDFC Life ahead of its numbers is down about 3%. Geo Financials, M&M, Interglobe Aviation, L&T, Kodak Bank, SBI, these are your key pressure points in trade. It's weakness across the IT pack within the mid and small caps as well. Look at a Tata Elxsi, that's down about 4.5% right now. There's KPIT, which is down about almost 4%. And then, of course, names like NBCC, which started their move only just as of last week, I think. NBCC as well is down 3.5%, and LTF as well under pressure by about 3.5% as we speak right now. Having said that, there are those dots of green in the market. Concor is now notching almost a 6% gain. Biocon after that Mylan exit, almost a 6% move there. Look at the Adani names, Adani Power, Adani Green. They're sitting on some stupendous gains for themselves. In fact, Adani Power is now notching almost 5% in the green as we speak, and MCX as well in tow. A good 3.8% up in the green as we speak right now. But let's take it across to Sajid and get in more analysis and insight on what's happening within the F&O universe.
Thanks, Aisha. You know, market's trying to hold on to the 24,000 level, but there is a lot of pressure coming in from the call writers, which is pushing the market down. So currently at 24.35 levels there, the discount has narrowed to 12 points, and the open interest is up nearly 0.4%. So the Nifty down nearly 0.7% in today's trade as we head into the last 30 minutes of expiry. Look at what's happening in Nifty Bank. Lots of shorts getting added there. The index down nearly 1.4%, and there too we have seen because of the shorts, the premium has contracted to nearly 97 points there, and the open interest is up nearly 4.9% in today's trade. The constituents of Nifty give you a good indication of short positions getting built up across the board and on all counters, whether it's a PSU or the public or the private sector banks. There's some long unwinds which is happening in IndusInd and Bank of India, but the end result is that there is a pressure coming in on most of the banking stocks in today's trade. There is especially for the July series. Call and put writing has been very aggressive. We've seen in the last 15-20 minutes a lot of call writing coming in at 24,000 level. 24,100 is been active since morning and it's been pushing the index down. If you look at the distribution chart, for now it seems that 24,000 has a certain base coming in or support, but if that increases in the last 30-35 minutes, we're going to see that breach of 24,000 also coming in there. In the futures gainers, you have stocks like Concor, where there's a short covering happening. Biocon is up 5.8% after the Mylan stake sale which has come in. The stake sale happened at 400. It's up. It's now at 437. Long build up seen there. Adani Power is seeing a short covering there. In the losers pack, you have Tata Elxsi with seeing a short build up. HCL Tech is down nearly 4%, 4.5%. KPI Tech is down. So Tech, which was up yesterday over 3.5%, is having some profit booking day today. In the open interest gainers, you have Kalyan Jewellers, again open interest up 12%. So that run continues, long build up there. Kalyan Jewellers are also the stock is also up. Biocon is seeing nearly 12% jump in open interest, and Tata Elxsi is seeing some short build up with 11.7% jump in open interest. Among the losers, you have stocks like MCX, they're seeing a short covering. Supreme Industries seeing a short covering, and Adani Power is seeing a short covering. The most active stock options today is TCS, 2200 July call. 2.95 lakh contracts getting unwound for that strike, and the stock up marginally, but hovering around 2174 levels there. The premium down 135 to 3140. In the put side, you have Infosys, 1100 July put, which is up nearly 2.5 to 3340. There's a 4.65 lakh open interest position coming in for Infosys, and the stock hovering just below the 1100 mark, where some pressure coming in, the stock down nearly 7.5. So the market trying to hold on to the 24,000 level as we enter the last half an hour of trade.
Okay, thank you so much for that, Sajid. Kunal, very quickly, your sense, should you buy the dip at this point of time, this near 200 odd point move on the Nifty? Should you buy this?
Not really. I think I'll still be on a wait and watch mode, because I think today, for example, the fact that we're just holding on to that 24,000 mark is because of the expiry, and I think like what Sajid was explaining about the heavy put built up, which we've seen at the lower strikes, 24,000. It's almost that's one of the major reasons why I think the markets are holding on to the support. But I think the near-term support for the index or the better price point could be at 23,800 levels. So maybe I think we'll just need to wait for another couple of days in case if the index tends to retest that kind of a support over the very short term.
Okay, that's the take coming in on the index right now. But Shivangi, let's focus on the good today, and a couple of buzzing stocks here. Tell me what you read on the charts. Concor, Adani Power, and then Adani Green.
Very good afternoon, Aisha. Thank you. So we've seen that Adani Green has seen some bit of OI addition over here, and definitely this one's quite positive with the price volume surge in this one. Consistently moving from the last 14 odd weeks, so definitely one of the stronger names. And my pick would be here from out of the three stocks.
That's that on Adani Green. Any word on the charts of Concor, Shivangi?
Talking about Concor, of course, this stock has moved quite well, but there is volume surge as well, and has surpassed its previous hurdle zones as well. But there is little, tailwind from the entire sector, which is why I would want to wait and watch for this one.
Watch mode for Concor. But good going for the charts of Adani Green. Shivangi, great to have you on the show today. Thank you so much for your time. Okay, on that note, let's take a very quick break. When we come back, the last lap of today's trading session.
Welcome back, and thanks for staying with us here on ET Now. Now, India's biggest asset manager has opened its IPO for subscription. SBI Fund Management will see an OFS of more than 11,600 crore, backed by strong anchor demand. The issue comes at an estimated 32 times earnings, below several listed AMC peers. Mithali joins in to tell us what to watch out for and the brokerage verdict.
Right, so SBI Fund Management, that IPO has already hit the primary market. The issue has opened today and will be closing on 16th of July. Now, on the upper side of this IPO band, you see this IPO is sized worth nearly 11,700 odd crore rupees, and at 574 per share, SBI Fund Management, it is valued at nearly 1.17 lakh odd crore rupees. So what makes this IPO stand out among the other listed players in the AMC space? So SBI Fund Management, it is India's largest AMC in terms of quarterly average asset under management. It commands a market share of nearly 15.5% and leads India's SIP business with 16.2 million live SIP accounts. The scale is actually quite massive. Total assets under management stands at nearly 29.4 lakh odd crore rupees, while the mutual fund business, it manages 12.5 lakh crore rupees, including 5.7 lakh crore in the equity-oriented scheme and over 4 lakh crore in the passive funds. The PMS and advisory business is also scaled at a larger one, and the company also serves nearly 18 million unique investors. Now, coming to the offer for sale, the IPO, which is already in the primary market. So SBI and Amundi India are actually selling their their company's stake, and post IPO, SBI stake will fall from 61.9% to 55.6%, while Amundi India's holding will be at around 32.6% post the IPO. At the upper end, if you see, so SBI is expected to receive 7,300 crore rupees, while Amundi will be receiving 4,300 crore rupees. Valuations will be a key talking point because SBI Funds, it is valued at 32 times its earnings, which is below Nippon Life, ICICI Prudential AMC, HDFC Life AMC, but above Aditya Birla as well as UTI AMC. Ahead of the issue, SBI Fund Management, it has already raised nearly 2,660 crore rupees from the anchor investors at rupees 574 rupees per share. So domestic mutual funds took the largest share in the anchor book. The issue also attracted marquee global investors, namely Government of Singapore, the Capital Group, BlackRock as well as Goldman Sachs, and the brokerage verdict is sounding to be quite positive. 9 brokerages have recommended for the applying of this IPO, and the streets are also sounding quite bullish, but we'll see how the subscription rolls out and also how is the listing for the company goes. Back to you.
Okay, that's that on the SBI Funds Management IPO. But let's welcome on board Anand Tandon and ask him about what he's making of the market. Anand, hi, afternoon. Great to have you on the show. Anand, just want to pick up on the point on IT firstly, because it seems that all the good work done post TCS's numbers is getting undone today. What is your own sense on whether or not any of the select few IT names also merit a buy?
You could argue that tactically, because of the fact that the stocks have corrected quite a lot, there may be a reason to be looking at the sector. But if you look at the business, I don't see any reason for optimism just yet. Frankly, the competition just keeps increasing because most of the makers of AI today are looking at getting into the services field. At the end of the day, the deployment of forward deployed engineers is nothing but an IT services opportunity that they are looking to pursue. And they have a clear advantage over the fact that you are also the maker of the fundamental models. So therefore, you can not only help the client companies to set up their own AI processes, but more importantly, tweak the models, something which the Indian IT companies will find it difficult to do. On the other hand, you also have the valuation. While they may be looking cheap in comparison to what they were in the past, don't forget that even a mid-sized company like Persistent today, for example, trades at something like 5 times sales. A company like Accenture, which is largely based on business understanding and processes, and a little less on technology, perhaps in terms of outsourcing, is actually trading at just about 1 time sales or a little, or perhaps just about a little more, and has similar growth prospects like some of the mid-cap IT companies. So even if you were to look at IT services at all, why would you not look at an Accenture as opposed to the Indian services? So net, if you are an India-only investor, certainly you might want to have one name in your portfolio, but I don't see a compelling reason to be anywhere close to even equal weight on it.
Okay, all right. Let me in fact go across HCL Tech CEO and MD Vijay Kumar's statement on retaining the guidance for FY27 and the company's roadmap for AI data centers. Listen to what he had to say.
Retaining our FY27 guidance of 1 to 4% at a company level revenue growth and 1.5 to 4.5% for services, both in constant currency. Margin guidance is also retained at 17.5 to 18.5%. And for clarity, this guidance is for organic growth and does not include acquisitions, including the recently concluded the Jaspersoft acquisition.
Okay, so that's the view coming in on HCL Tech. But let me quickly go across. Kunal, what's your view with regard to this 4.5% gash on HCL Tech? Do you go out, go long?
So not immediately, but I think, maybe I think over the next couple of days, there could be a better opportunity which could arise for HCL Tech. The 20-day moving average support or the level for the stock is at 1130. The stock is currently at 1165 approximately. So which means we'll wait for potentially either a time-wise or a price-wise retracement towards this 20-day moving average. If that happens, say in the next 2 or 3 days, then maybe I think closer to this 1130, 1140 range could be a better price points to go for a contraband in HCL Tech.
Okay, and what's the take, Kunal, with regard to TCS in particular? Because that one is bucking the trend.
Yeah, it is, and the stock has been a lot more stable post the results for TCS, the stock post results, I think on a single day had seen a very mild uptick, but then the following next 2 days, the stock has seen a decent upside. Net, I think it's moved on from that 2000-ish kind of a zone, which it had hit, I think, a couple of weeks back towards 2200 mark. TCS is a large cap stock, we all know that, but more importantly, it's a very low beta name from the entire IT gamut. So you expect that the stock would go into a very slow, gradual uptick, but the fact that it maintains the positivity indicates that we are looking at a potential possibility of a decent trend in the making for TCS.
Okay, let me in fact go across to Avi. Landmark Cars is the one stock which is on the tear on the back of what was a very strong business update for Q1 FY27. Avi here decoding some of those numbers.
Landmark Cars has come out with its Q1 business update, and the auto sector clearly has been heating up. The vehicle sales are up by 24% on a yearly basis, and the after sales segment has also increased by 14%. This was the highest Q1 for the company, driven by strong vehicle sales as well as the after sales segment. New models were launched in the June quarter, like the Mercedes-Benz CLA, MG Magister, and the new Renault Duster. So the deliveries for which led to the growth in the business for the company. Further, new models are also expected to come in the upcoming quarters from Mercedes-Benz, BYD, MG, M&M, Honda, and Kia, which will further strengthen the business growth and traction for the company. The supply of BYD in this June quarter became better and is expected to increase in the upcoming quarters. Also, the ramp up and stabilization of newly opened workshops, the after-sales business delivered strong performance on back of this workshop expansion. The company is expanding its workshop capacity in several brands to meet the increasing capacity and demand that the company is facing. So, on a strong business update and the auto sector heating up, Landmark Cars is up by almost 15%.
Thank you for that, Avi. Anand, this has been a couple of quarters now. Landmark Cars has come back into focus in a big fashion. Sales have picked up very well. Premium cars continue to do very well. Do you play this theme? Do you avoid it? How do you play it?
And the car auto sector has been doing well even in the markets, and the numbers are there to show the kind of performance that we've seen. Would you want to play it through an agency like Landmark? I think the margins there are going to be very narrow, and of course, to the extent that volumes go up, they will also benefit. But I think it is perhaps safer to either buy the auto ancillaries of the car or the manufacturer themselves. Do keep in mind, however, that over the last 10 years, the valuations of the car manufacturers and generally the auto sector has doubled, whereas the growth has been inimical for a reasonable large part of that. I mean, it depends on the segment you're looking at. So while the high-end cars and the SUVs have done quite well on a smaller base, SUVs not so much. They've done well without and have been taking a larger part of the market share. The two-wheelers have suffered. Even today, for example, the motorcycle volumes are lower than what they were, I think, pre-COVID. So we still haven't crossed that. Those scooters have picked up. So yes, there are segments in the market, tractors being one of them, which have actually done quite well. And I think it is better to actually just simply buy the auto manufacturers or the ancillary players because they have a broader set, especially those which are also exporting. Companies like the sellers and the servicing companies are okay, but they are kind of marginal at best in terms of the kind of money that they'll make out of the ecosystem.
Okay, Kunal, this Landmark Cars move?
Yeah, it's a very strong move. Just looking at the charts, the stock is back towards its almost closer to its 2026 highs, if I'm not wrong. It started off the year at 480, 500 levels, moved lower towards 340 mark. So it was a decent correction for more than 30% for the stock price at the start. But it's managed to recuperate those losses and come back to a good uptrend. What's interesting about the chart is that the weekly time frame basis, we are looking at the indicator, the MACD, coming back into a bullish territory. If that happens and if it sustains this level of 480, 500, say for the next 1 or 2 weeks, we could be looking at a potential possibility of at least another 3 to 4 weeks of a consistent upside over the short term. That could take the stock towards almost 500 to 550 range in the near term. So which means potentially another 10% could be in the offing for the stock.
Another 10% in the offing. So that's the trade on Landmark. Also curious to quickly pull out some buzzers as well in trade today. And within that pack, there's also Fino Payments. That stock is up 9% in trade. Kunal, I'm sure you don't track it, But if you can give us a sense, it's been a couple of days where there's been very sharp moves on this stock. What next?
So I think we are in that phase of the market where many of these beaten down names are going through a major short covering wave for themselves. Even Fino Payment Banks, for example, the highs when the stock started off in 2021-22 was almost at I think 500, 550 mark. From there, it's been a consistent pattern of lower highs and lower lows on the quarterly charts. The stock recently made a low which was around 120, 130 for the stock in the last, I think, 3-4 months back. And now it's moved towards 175 kind of a mark. So I think it's been into a recovery phase for the stock. But when you look at this on the long-term charts, it still looks like the long-term trend for the stock is still on the downside.
Okay, long-term trend on the downside. Be careful there, viewers. That's what Kunal seems to be kind of putting out. Let me go across to Mithali. She's here with HDFC Life. They're set to announce the Q1 results tomorrow. Analysts penciling in slower premium growth and a marginal decline in profitability as well. Mithali is here with what to expect.
Right, talking about HDFC Life, so the company is expected to report a moderate set of numbers for the Q1 FY27 with growth seen moderately in their new business performance, while margins could be under pressure for this quarter. The annual premium equivalent, or the APE, it is expected to grow nearly 8% on a yearly basis, while it could see a decline of nearly 33% on a sequential basis due to the March being a seasonally strong quarter. The growth momentum, it remained weak also during the quarter, with April and May being a slowdown month for the company, while a flat growth seen for the month of June. The value of new business, or the VNB, it is which is a key measure for the profitability of the new business insurance companies, it is expected to grow nearly 5% yearly, while the VNB margins are expected to be under pressure, reported at 24.3%, which will be down nearly 80 basis points if you see on a yearly basis. The margin pressure, it is expected to come from the GST input tax credit losses, partly cushioned by the favorable product mix, if any. The key focus for the investors will be the management commentary on APE growth, the trajectory of the VNB margins, commentary on the product mix, and also if any restructuring seen on the recapping of the commission payouts. The key takeaway is that the HDFC Life, the results could deliver positive growth in both the business sales as well as the profitability front, but the pace of growth, it remains modest, and margin pressure, that is one concern the streets are penciling in for this quarter for HDFC Life.
Okay, thank you so much for that, Mithali. Let me go across to Anand. Anand, some of these names within the life insurance pack, quite beaten, don't you reckon? And would you say that it's a good time to probably go out and buy? I mean, when we try and compare some of the price to book ratios of large cap private sector banks and then their peers, which are life insurance companies, the re-rating has been quite solid.
Life insurance went through a bit of a hiccup for some quarters last year, but after that, I think the numbers are beginning to show up again. Frankly, companies like Max Life, for example, have done exceedingly well. And SBI Life, for example, continues to deliver a steady set of numbers. HDFC, ICICI have been a little more patchy, but net, looking beyond the quarter, there is no question that life insurance still remains somewhat underpenetrated, if not in terms of number of policies sold, then in terms of the value of each policy. I think India remains somewhat underinsured. The other thing is that we still have very few risk policies opposed to ULIP policies. So I think the runway remains very large. Aside from regulatory changes, for example, where the requirement that you need to diversify or have an open structure for selling multiple policies through bank assurance, other than those kind of things which may affect some of the listed players, by and large, I think as a sector, I am very quite bullish on this space and its ability to continue to show reasonably strong growth over many years to come. So any such fall should be looked at as an opportunity to buy. Remember that life insurance is actually for life. So, once you have bought a product from one company, you are unlikely to be able to shift, which means that even if the initial margins appear to be a little low, the lifetime margin for the policy will still be reasonably high. So I think, looking at players which are able to grow and have a good enough reputation that you are willing to stake a lifetime worth of insurance with them makes a lot of sense from a customer point of view and consequently as a shareholder as well.
Makes sense. Anand, I know you did mention that you buy on every dip. Do you buy now or do you wait?
Well, that depends on the kind of context that your portfolio is operating in and what you think overall. But I am a great believer of diversification, so you shouldn't be overweight dramatically on any one or two sectors. So, given your asset allocation, I would argue that wherever sharp falls happen, you should look at them as an opportunity to buy. It doesn't have to be at one time; you can stagger it a bit. But trying to time the market and saying I will buy at the absolute bottom or top never happens. Therefore, it is best to start making small purchases across as the market kind of shows trend one way or the other.
Yeah, wonderful advice. Thank you. Thank you for that. Let me go across. Kunal, what's your take with regard to some of these life insurance names? HDFC Life, LIC, even the likes of an SBI Life, ICICI Pru Life. What's your view?
See, I think on the short-term charts, we're seeing a trend being evolving for many of these insurance names. So what's been happening is that the likes of ICICI Pru, HDFC Life, in the last 3-4 days, they've seen a good chunk of price volume built up for themselves. The stock prices have moved up higher by approximately 5 to 10% for the stock as an overall bunch. SBI Life has been one of the other names which has done reasonably well. The stock, I think till yesterday, was on the verge of breaking back again above its long-term moving averages. So the prospect for these stocks is quite interesting over the short term, but it's just that we wait for a breakout of the long-term moving averages for a bigger trend to evolve into these names. That confirmation is still pending from the insurance pack. So that's why we'll take it step by step. Initially, we look at a short-term rally, which means 5% to 10% kind of a category for the stock in the near term. But once we see breakout confirmations about long-term moving averages for, say, 2 out of the 3-4 names on the insurance pack, then we can attribute that the entire sector is going through a revival.
Okay. Then there's obviously SBI Mutual Fund as well. That IPO is through. And let's quickly pull out some of the subscription numbers if we can. The retail subscription, I believe, is at around 30% odd, 35% odd, the last I had checked. There you go. You've got the retail component now at 53, so half times the full subscription. QIB, NII, employees, that's really the way in which it's shaping up. The total as of the current hour of day one is around 0.6 times. Would you go out and subscribe, Anand? What's the take here?
I mean, the business is great. SBI is one of the stronger players in the industry as well. I always had a problem with the kind of valuation some of these companies trade at in India. I mean, you look at, roughly the largest in the world, BlackRock trades at 1/10 the valuation in terms of the assets under management versus the valuation compared to the Indian AMCs. So that kind of puts some amount of question mark on where these things can go. But broadly, it is a space which is still emerging. Growth is likely to continue, even if you think at a slightly lower space than we have seen so far. And it is something therefore that will continue to grow in terms of bottom line as well, because there is very little cost that gets added as the AMC's valuation, as the value of the AUM increases. That said, the challenge is that in India, we still have the ability to market as more important than the ability to perform. And I think somewhere along the way that will change, and people will become a little more circumspect about putting money just because somebody is pushing the particular fund to them. Net, because of the fact that it has less stickiness than, let's say, insurance, which we just discussed, I think valuations become a little more concerning. Aside from that, SBI is obviously, as I said, one very strong name. So from my personal perspective, I don't like to buy IPOs. I would wait for them to actually start trading. But that doesn't mean that one should not look at this company. It is as strong as any of the other leaders.
Right. Some of the buzzers, and I want to try and quickly focus in on a Nalco, for example. How does this one look on charts, Kunal?
Yeah, Nalco is something which is very, very interesting. It's a differentiated chart altogether because it's been a lot more consistent chart over the last 3-4 years. We've seen the stock moving on from a meager amount of, I think, 30 or 40 rupees in 2020 towards 350, 360 where it's trading right now. Even the recent high for Nalco has been quite strong. It's bounced back towards its 200 moving average in this recent leg of price correction. So it looks to be a stock which is evolving quite well. I think traders with a slightly higher risk appetite, they can look to venture into the stock at the current levels. But I would suggest that keep 200 moving average as a closing base stop loss for this trade and expect the stock to show a decent bounce back.
Okay, all right. Anand, I wonder if you have a view with regard to some of the stocks or spaces where there are companies holding large cash balances, the likes of a car trade, the likes of a Just Dial. How do you look at some of these names, and any of them looking interesting to you?
So while Just Dial is trading at below cash, so therefore there is obviously some cushion in the pricing. The point is that I find the business unable to be able to grow very dramatically. At the end of the day, if you were to look at the simple metrics as how many numbers of recommendation they can have on their first page, there is only X amount of real estate that's available. Consequently, their ability to push newer categories to be able to create newer pages on which they can have new vendors to promote is somewhat limited. So, yes, pure value, great ability to grow. I think I have a few question marks there. Car trade is a different ballgame altogether. I think they're doing exceedingly well. Business can continue to grow. There is no particular headroom problem there. Their ability to have bought over and converted a loss-making website into a profit-making one in terms of OLX has been very good. Of course, the stock has also run up accordingly. But eventually, if you are looking at a longer-term picture between the two purely on the business model, I would favor a car trade. That's not a recommendation. I'm not taking a call on the prices or on the valuation. I'm just saying that the business headroom seems to be higher for car trade as of now.
Okay, and Kunal, I wonder if you have a view with regard to a Biocon, the 6.5% move sustaining. Pharma in general also doing well. Even a Divi's is up 3.5+%. 7,200, the levels have changed with regard to Divi's.
Yeah, so I think Divi's is interesting. Biocon also I think is an interesting chart because we're discussing a range of 400, 435, 440 for Biocon. Today the stock is back again towards challenging this upper end of the range. 440 is the major breakout point. But the approach of the stock today is very, very interesting. Of course, it's on the back of the news flow for Biocon at the start of the trading day. But then the volumes today on the much higher side. It'll be interesting to see the delivery data for the stock price, whether there's been a good amount of delivery buying on the stock today, or whether it's more to do with the short covering on the F&O side. But if we happen to see a blend of both short covering as well as delivery-based buying, then we could probably expect that the stock can see a further legs on the upside. The breakout point which I'm waiting out for Biocon is 440 levels to be taken out. We are very close to that kind of a zone for the stock price, but it's always better to try and wait for that confirmation when we are so close to that kind of a level. So 440 is a breakout. Above those 440 levels, expect the stock to come back into at least a 485 to 490 in the very short term.
Anand, do you have a view on pharma? And if so, how are you playing it?
Well, pharma is obviously one of the better positioned sectors, unlikely to have tariff problems in the US. The US market has stabilized and is growing. The pipeline of stock of drugs going off patent is again actually fairly large. And of course, you have a few blockbusters that are there in the pipeline generally. Domestic market continues to grow at 12-13%, fairly healthy clip. Net, I think for the last few years, only the domestic market was moving up, whereas the international market had pretty much remained flat or become more difficult to deal with. That headwind is now gone. So if you put in the kind of the fact that, we remain one of the best players in the market, have the best kind of product outline, the best FDA facilities, the ability to export, the fact that the rupee has fallen, all of it are in favor. How do you play it? At this stage, a mix of domestic players as well as those which are exporting to regulated market would be the best bet. Some of the leaders have already shown that in the price, but I think there may be a little more to
go. Okay. Also, the textile pack, that one's in focus. PDS is doing very well in trade, for example, today. Company has signed a multi-year agreement with a global sourcing arm for a global supermarket retailer. The agreement is to focus on expanding global sourcing and supply chain management. Ravinder here with the details.
Well, as PDS Limited is in focus in today's session after company has signed a multi-year sourcing as a service agreement with global sourcing arm of a leading French headquarters supermarket retailer, and under this agreement, PDS will manage textile and apparel sourcing across Bangladesh, India, Pakistan, Sri Lanka, and Turkey, with the operation commencing from 1st of November. And the company will provide end-to-end sourcing and supply chain management services through a dedicated operating subsidiary, enabling the retailer with a more agile and scalable sourcing model. And PDS expect to manage annual appearing sourcing of over $250 million under this contract, making its meaningful addition to the sourcing platform. And this partnership will further strengthen PDS long-term relationship with the global retailers, reinforcing its sourcing as a as a service business model, and expands its global sourcing and supply chain management platform. And remember that in Q4 FY26, management has guided 40 to 50 basis point annual gross margin expansion and 50 to 70 basis point EBITDA margin expansion over the next 1 to 2 years, while maintaining the mid-single digit revenue growth and targeting around 10% profit growth. And as of early April 2026, the company's FY27 order book stood at approximately 5,074 crore, providing healthy revenue visibility. So back of this multi-year deal, PDS Limited is in focus in today's session.
Okay, thank you so much for that, Ravinder. Anand, as a larger trend, you expect some of these textile companies exporting to US, UK and European markets to do well in the medium term, given the kind of FTAs, etc., that are coming in place?
Well, right now, I think, we are in a sweet spot in terms of the export of garments, etc., because especially cotton, two things have happened. One is that, you've had a good crop and therefore prices in raw materials have been low, and most of the companies are likely to report good numbers. More importantly, because of the fact that we've had petrochemical prices going up, the competitiveness of cotton has also improved because, as the synthetics go up, the ability of the cotton prices to move up also increases. On both counts, at least those which are in the business of cotton textiles are going to do reasonably well, and exports are, I believe, quite robust at this stage. On a longer term basis, it is a cyclical industry. You have to keep that in mind, so it's difficult to take a call. But I see a good next to 10 to 12 months at least, numbers being reasonably decent.
Okay, understood. Anand, we'll let you go on that note. Thank you so much for joining us, giving us that perspective, and coming in today and giving us your time. Quickly, Kunal, on to some of these textile names. Any one or two stocks which stand out for you?
See, I think Welspun Living is the only one which is looking very, very strong. Raymond is the other name which, of course, has done reasonably well on the long-term charts. But what's actually happened is that because of the steep run-up in the last 3 odd months for many of these names, it just looks like that maybe I think we are into that slight overbought territory for these stocks to try and initiate a buy. What happens is many times prices move first, news follows later, or even they follow later for the stock prices. But it's always better to try and buy these stocks at the points where the risk reward is a little attractive. Right now, the risk reward for a fresh buy is not very attractive.
Okay, so that's how we've shaped up for the day. 0.7% lower, not a bad expiry. 170 odd points lower on the Nifty, but the IT index is down 1%, and one of the reasons for that is the kind of move on HCL Tech. HCL Tech down 4.7 odd percent. TCS though holding up very well for itself, 0.75% higher on a TCS. So that move really reflecting. The Nifty Bank also was a tough one today. Pretty much all stocks in the red except Union Bank. That's the one that's puzzlingly so stood out and done very well for itself. Pharma, or done rather reasonably okay, just about in the green. Pharma has been the other one which has really stood out. Biocon, Divi's, Sun, JB Chem, Mankind, all of them up 1%, and that's led the Nifty Pharma Index higher. Also, the breadth on the Pharma Index was very different from the market breadth, so that's the one which has stood out. Metals too, Nalco, Hindalco and the like. You've got some buzz around the China demand sustaining going forward, and in fact accelerating, as a result of which you saw some very decent moves on an Hindalco, on a Nalco up 2.5%. You're seeing some of those moves play out. Last off, I want to quickly flag off from the 500 bucket. There were quite a few buzzers, while the tilt of the market was largely negative, 1:3 in favor of the declines. I want to quickly mark out some good stocks which have stood out. Concor 6%, Nuvoco up nearly 7%, Adani Power, MCX, Welspun Corp all up 4% plus. Kalyan is the other one, 4% higher on Kalyan again. Eclerx, SBI Cards, you saw some decent moves on card trade as well. All of those stocks did very well in a market which was otherwise fairly weak. Kunal, expiry date done and dusted. Not too much damage, frankly. 170 points is, we would have taken it had we gotten to know in the morning that it's going to be 170 points. We would have largely taken it, right? It was a tough morning, 5% higher on crude. There were negatives, plus there was expiry as well. Didn't see any of that translate. You believe 24K being held is a crucial positive?
See, 24K is something which is a pivot point for the markets. We've been swinging around this level for the last many days. But the real damage for the index could start off once we break below that 23,750, 23,800 mark. That's the 50-day moving average. That's also the previous support from where we bounced off, in the previous week on that Wednesday sell-off. And also, I think more importantly, it's where the indicators will start to come back into a slight negative territory. I'll not call it a bearish territory, but slight negative territory for itself. So that's, I think, the more important support level to watch out for. Right now, we are in that zone where it's more the options adjustment, which is happening for the last, I think, 2-3 weeks, where you're seeing the Nifty broadly into this range, 24,000 plus minus 250 points. So no major damage for the index. Hopefully, if we see a recovery of sorts from the global markets after the last few days of sell-off, then maybe that could probably aid the move on the slight bounce back further. But again, no major signs of a trend which is emerging on the index at large.
Okay, so that's that, at least for the day of trade this Tuesday. Thank you so much, viewers, for tuning in and staying with us. It's a goodbye from all of us who puts this show together. And thank you so much, Kunal, for joining us this afternoon.